to some kind of a rally. But what's important and what's interesting is that because the market never opened at those lows this morning, to be able to get a V-shaped pattern built on sentiment and throwing in the towel, what we're looking at now is a situation where, and especially if you use the volatility, the short-term trading index. Look at this. Yesterday, the Dow was down its greatest percentage all of this year, and the volatility index, the TRIN index, went to a high of 1.45. It should have been 2.45. It should have really been 3.45. So that's saying that the way I read it, it isn't the way the TRIN is gauged, the way Richard Arms had developed. The TRIN is built up on moving averages and all sorts of other technical factors. The way I use it is just merely numbers. That's all. I make it real simple. And in this particular instance, for my overview for my subscribers, it's called, I wonder if I can get it right here. I'll show you something very interesting. It's coming up. And do I have it? Yep, there it is. It's right there. So let me slide this across. Let's see if it comes up. It'll be a little difficult to read. Sliding across. Let me see. How did it come out? Yep, there it is. Very good. So what we're looking at in this particular instance is that you've got these the quintiles, these 5 areas. You've got the Dow 120-minute chart, shows the channel that it's in, up and down, lower lows, lower highs. It shows the VIX index, higher highs, higher lows. In fact, it broke out today and went to that 21, 22 area that has been our target for this particular move. Now, let's go one step at a time. Here's that TRIN index. And what I discussed here is overview market day. Caution still prevails. Lower lows and lower highs a bear market makes, etc. And I go on. I talk about the VIX index. I talk about the IYT, the transportation index, the semiconductor. Just got a whopping down move today. What a pity. We would have had almost an 80 to a 90% gain on that. We've had a fabulous gain before. I didn't get back into it. That's been the big problem here, is that if you get out of the shorts, you don't really know where to get back in. So now, look at this. If you're looking at the whole story, you've got the Dow, which has refused to break above the downtrend in the Chapman wave falling axe formation. What's the falling axe formation? Well, I just wanted to show the right shoulder pattern because we're going to be looking at Delta Airlines in a moment. But the falling axe pattern, and this is one of the techniques that I've developed. Basically, it is a declining, expanding cone. I like to give them nicknames. It's just easy and fun to remember. When you break to the upside, that's very positive. But as long as it remains a barrier, that barrier can be very powerful. But if it becomes a support level, you can go 1 to 1, then 1 to 2, and even 1 to 3 to the upside before making a top. It's an extraordinary technique. So let me just get this rid of this for the moment, and let me go on with the story here. Let me just close this. Right there. Okay. Now look at this. The Dow had a left side, right side price time match. It already took out the low of 16,575, and today's low is at 16,611 so far. Well, that 16,611 area is going up against that low of, it took it out 16,575, the low of the 15th of August, which means that I wrote 18, but that should be, let me just change that right now. Edit, should be a 6. Plop. Okay. The 16,518 level would be the next level of support. Oh, it didn't take out the 16,575. So what's happened is we've got the potential here for another doji candle. Well, what's interesting is the zebra crossing where you've got candles, white and black and white and black and white and black and white and black. Now I've got another white candle potential here. Has been going from lower lows to lower highs and back to lower lows. And you've got a price time match which says that by the 13th, that is on, what's the day? By Monday. By Monday, there should be a test of the 16,518 level. So what I've done here is I've shown, using the Chapman methodology, the arch formation. I always spend time, for those of you new to my work, arch formation is my CD introducing the Chapman methodology. It is right here, arch formation. And what do we look for? We look for a left side, right side price time match, where you go up and then come down. Sometimes the plumb line is exactly in the middle. Sometimes you have to use a special candle that you have to identify to get it. But most importantly, I use a number of resources, especially that inside wedge formation, which is the target line. The price target line. So now what we're looking at is that inside wedge comes together on the 13th, round about that 16,518 level. All right. Now let's go on to our story, and I'll give you all the numbers. The Dow. So we were looking at the trend gauge, which completely ignored that massive move down. That's a big negative. It's like saying, there was an accident, but the person that should have been looking at it was buying coffee. The accident is still there, and it's got to be reported on. And this is exactly it. The accident is here, wasn't reported on yesterday. It will be reported on later on when we keep going down. So in the meantime, we're getting close, as I said, to some kind of a bounce, but let's do the numbers. The Dow is up 5 at 16,665. The S&P is down 7 at 1921. That's mostly because you've got some of the semiconductor. Look at this, SMHs. Wow, I can't believe we were in the SOXS at 18 something. We took a really nice, I thought it was a really nice profit. At 11 or 12% profit, and all of a sudden it jumps today to 27, 9 points, 8 points higher. Wow, what a nice gain that would have been. Anyway, so that's leg D in the 120-minute chart. That's leg E in the daily. And look at this, the VIX index has gone right to, I'm not going to get to all these numbers. The VIX index has gone to leg D in the daily. 120-minute chart, leg E in the daily chart. It did. I've been discussing this for months, that there will be a move up into the 21 area, 20 to 21 to retest. Look at this, leg C. This is the first time we've gone to a C in a long time, instead of those Bs. In the VIX index weekly chart, it depends where it closes today, but it hit 22.06. So we've kind of hit our target, but I don't see any signs yet of a serious bottom being made, not at this particular point. And if you're thinking that there are positives here, you have to put it into the context of, if there are positives, do you want 1,000-point pullback in the market before you get the rally of maybe 500 or 600 points? I don't know if I want that. I want to be with the trend, and thank goodness the Chapman wave methodology, at least at this particular stage, has been keeping us on the right side, not being long but being short. We've been long the ETFs that are made up of short positions. Here's a good example. We took some profit today. I want to keep this as a core position. It's not been easy. I've held it up until now, but it's leg D with a very stretched MACD. The stochastic is okay. This is the SPXS. We bought it at 23.57 on the 22nd. What was the 22nd? It was the session after the market's high, the Dow and the S&P's high on the 19th, and we bought it at 23.57. The low was 23.07, so within 50 cents of an all-time low, and we've gone to leg D. And I thought it was incumbent upon us that if it broke above peak C1, C2 at 26.47, we've got to raise the stop, which we've just done. And as a result, we've taken some profits, but I'm determined to do my absolute best. It's going to be really hard to do, but to try to keep that core, and then maybe add to the put that position back again at some point. Maybe I shouldn't have touched it, but you know what? We added another position today on an index. It's just been like a rock. And it's just been strong, and it's been refusing to go down. I think that particular sector is just about vulnerable now. It's going to be the SOX, is going to be the semiconductors of next week. I think. I don't know, but that's the plan here. So we've added to that. So we've only got short positions. Now we've got the S&P down 10 at 1918. So I showed you the SPX, that's 300% short the S&P. So we are long 300%. We are short the Dow. And we're short a particular stock. I want to show that stock a little later on. I showed it the other day, and I don't want to show it. Believe me, this is not patting myself in the back. This is only to show that if this particular stock, an internationally recognized stock, is being clobbered, it's the only word we can use, what is it saying about this market? It's not a good sign. So you've got the QQQ series. The comp index is down 62. The comp index has just broken major support, and all these indexes have given sell signals in the weekly charts. By today at 4 o'clock, I'm pretty sure they're going to be giving sell mode designations. That's time and price. Look at this beautiful channel on the weekly chart that I've been showing for quite some time now in the VIC in the QQQ series, and that's a potential peak F top in the monthly. Man, I tell you, I know that this has been a major bull market. But the way it's acting right here, the way these technicals on not the short term, but the weekly and the monthly are acting, I'm getting signals here that say this is not the time to be bravura, to grabbing the long side without tight stops. You can do it, but make your stops tight. Let's go on. Gold now is down 3, so I don't. This is an interesting phase. Gold is acting well, considering that it went to a left side test of the low of the GLD tested the 114.46 area from the week of January the 3rd. It went to 114.42. It went to a slightly lower low, and it's rallied off that. So on a daily basis, this is actually kind of okay action. I'll talk about the dollar. Well, the dollar right now is down. Is up 32 cents at 85.98, and bonds. I'll talk about those when I get back. I still love to hear from you at 877-976 is great. Basil Chapman, Tiger Technicians Hour, Dow's down 10, S&P's down 10.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's continue looking at the list. We've got the TLT, which is a 20-year T-bond fund, making a leg C up in the weekly, a C up in the monthly, leg C in the daily. Let's see if the 120-minute chart is doing the same thing. Where did it go? It's a 2-minute chart we don't need. 120-minute chart, leg E in the 120-minute chart. So it says that, in a sense, we're getting a little bit close right here to some kind of another bounce attempt in the market, trying to probe for a base. I love that expression. And most importantly, the TLT would then have 118.32 as very strong support and probably go to a leg D, but the stochastic went to 94% and the MACD is very strong. So as long as it stays level up in the 90s in the stochastic, that's going to help the weekly chart technicals improve a lot. The monthly chart actually is very, very good. Wow, it's surprising. It's 31-year bull market in bonds and it's still going on into the acceleration phase. Can't believe it. Okay, and then you've got the dollar DXY. It's the currency. It's having a nice retracement. This is going to be very interesting. Do we form this particular pattern here? This is the pattern that I wanted to show a little bit earlier. It's the right shoulder failure pattern, and that right shoulder failure pattern is, in fact, I think it was 21, right? Yep, right there, 21. So this is in my CD introducing the Chapman Wave methodology. It's this thing here where you pull back and then you try to rally, but you can't because the technicals are starting to fail. If, in fact, that happens, that's like the H pattern. That's another way of looking at the lowercase h pattern. This is just, if you have a robust technical system, then what you want is every time you look at something, you want to be able to verify and have it correlate to other aspects so that the two or three things together give you an even stronger conviction. And in this particular case, you've had the pullback in the stochastic and the MACD in the daily chart of the dollar, but and this is why it's very important right now to be watching gold's action, because if there is a failure to break to the 86.76 level to start another leg up, and that would be in the weekly chart next week, leg D, and the technicals in the weekly and the monthly are really still very strong, but you've got that resistance that was hit, that 200-period exponential moving average in the monthly chart. You finally hit that. This is where you get a little pull back, and then it becomes a magnet line. If it isn't a repellent line, it becomes a magnet line, and that's at 86. That's at 80. Oh, why can't I get it? Well, it's right here. It's at 86, around about 86.50. Okay, and so far it's very good action. So the dollar is going to be key. Now let's put it together with the GCZ 14. And you'll see that gold has held very nicely off the low, but the power of the down move has seen the divergence between the rising technicals actually correlate to a price movement up. And that's why the two things have to be watched together. Because if the dollar starts to pull back, that could be impacting the market negatively. But at the same time, if gold starts to rally, that rally could in fact take it to 1239. It's at 1221 right now. That's the 9-period exponential moving average. I'll draw it in as a potential here. And that could even take you to 1250. A very nice move, and then we'll start to see it pull back again as the dollar strength, if the dollar strength returns. I say if because the monthly chart of the gold, it's not a good-looking chart at all. So I think we've covered a chunk of things here. Now what I want to do is the question of the airlines. I had a question about Delta, so let's look at this. The airline index made a peak E, and then it made that exact 88.98. So it went to a leg F. That's that right arm extension. It's like a rogue wave almost. And what does it do? It goes from a down arrow right there to a little inverted V caret right there. And at 88.98, it reverses down and it pulls back and it breaks underneath, in the weekly chart, underneath the trend line support. But the monthly is in a G with every characteristic that I can think of to really make it a G instead of a C. In fact, at the close today, I'll probably will have to take away, I'll have to see where it closes. But in the meantime, back at the range, when I'm getting such strong signals in monthly charts, the question in the den was, Basil, where did it go? Could I look at the 10-minute charts? All right, well, we've got a break coming up here. The question is, Basil, have you changed or moved off the view that this correction is not the top and there will be one more leg up to the higher gain at some point? Thanks. I'll answer that question when we get back. I'll also show you that Delta is in a descending mode, hasn't made a landing yet, but it could have the first bump of land coming up soon. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds. Plus, you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we were just having a little conversation between me and the dentist over there. And the question is, if the New York Stock Exchange is making a peak F in the Chapman wave, can I be considering that this isn't the top, that this is just a top, and then we will still come back and make another top in 2015? And the answer is, if everything I'm doing, looking at the socioeconomic, political considerations that I constantly show my subscribers to my opening call, if those factors are still in place, I've been showing the acceleration just here in the Boston area alone of the number of times word skyscrapers come up. And in fact, it was just the thing I showed right here on TFNN. Was it maybe 2 weeks ago or something like that, where there are just a slew of skyscrapers on the boards about to be signed off on here in the Boston area. This is Boston's a very conservative place. That's where the expression "banned in Boston" came from, and always the last to pick up on a trend or change a trend. And if they are starting this whole skyscraper thing, I don't think we've made the top yet. I think we've still got a little way to go in terms of all those socioeconomic things, and I'm still waiting for a house that costs the price of something in the 500 million area. Someone's little cottage like they used to have when they were building them in the 1890s and in the 1920s in Newport, Rhode Island. Those little baby cottages. So anyway, let's get back to our story. So the answer is, even though it's peak F, that means we might have to start a brand new buy mode, which means that you can't get a peak D until at least mid-year next year, waiting for at least 4 peaks to the upside. I don't know. Let's just go one step at a time. I see the signs of a pretty big correction here. I just don't know yet if I see a major top. So let's get back to our story. The NYA, yep, that's getting close to some kind of support on the left side. Most important thing is, how does it handle 10,270s, the left side double bottom, the week of the 11th of April and 18th of April. Okay, now the XAL, as I said, on the way down. Look at Delta. So Delta has made a peak F top in the monthly chart. I guess I got to take this very seriously. But peak E with it, and there's that pattern I was talking about, the right shoulder failure right here. Look, See this pattern? There's another one over there. See the one over here? And you see the one over here. This is General Motors way back when it was trading up in the 46 area. And same pattern. Look, there it is, that H pattern. And that's the pattern that we've got in the GLD or the gold contract. Where did that disappear to? The GLD monthly, you see. So that's the reason why these patterns repeat over and over and over. And I do not want to fight those patterns. Look, there it is. The H, lowercase h, goes to the lowercase m. And that's that right shoulder failure pattern. In this case, it's the H pattern. And now we've tested the left side low. The most recent low was 114.42. Just by each time, we went 114.68. Then 20 cents lower. That was back in the week of the 28th of June. The week of the 3rd of January, we go to 114.40. 114.46, the week of the 3rd of January. Then last week we go to 114.42, 20 cents, 20 cents, 20 cents. That is amazing. In all that time, and we're trying to make a base. And look, the stochastics turned up, MACD's flattening out. I still think it's only just a potential balance if it works out. So we'll be putting that together. Now let's go back to our patterns. We're looking at DAL, and Delta has in fact plummeted, and looks to me like this candle right here, the candle of the 18th of April, with a low of, dare I say, 10% lower, 30.54. The low of 32.27, the low of the week of the 11th of April, and then the lower low of 30.54, making a Roman candle, Chapman wave Roman candle. That's the area of great importance for Delta. So maybe a little bounce, but that's the area that's going to be tested at some point over the coming weeks. And we're going to go to our first caller. We've got Dan in Baskin Ridge, New Jersey. Dan, how are you?
Doing well, Basil.
Good.
Hey, I just wanted to call about the IWM.
Yes.
Basically, what I guess was that Wednesday afternoon, I had gotten, I wouldn't say stopped out, but I got scared out.
Okay. Oh, the big rally, yes.
Yeah. As it just seemed over the past, 4 years, it's always been by the dips. And so I figured to just be safe, I'd get out. But I did have, probably 10 points on that trade.
That was a beautiful trade, and you were very, very patient, and I don't blame you for getting a little bit nervous on that move up on Wednesday, because it was so irrational that you had no idea whether there'd be further irrationality. But fortunately, just based on technical considerations, fortunately, we managed to jump back in on the short side of the opening on Thursday. But in fact, that if you use the 9-period exponential moving average as a benchmark for your IWM, the Russell 2000 ETF, I can see exactly why you would have been very nervous, because the next day it actually broke above it at the opening for a moment. So you had no idea whether or not there'd be a bounce to test the doji high of 110.32. So now let's put it this way. You got a really good profit. You gave up a potential extra 2 points, but at the same time, see, I'm trying to do the same thing. Instead of, one of the things I'm kind of proud of, and maybe today I won't be so proud of, I've been very determined to stay with our core position in the S&P and constantly gone back into shorting the Dow. But I felt that if there was a leg D in the daily chart of my of the inverted S&P chart, I had to respect that as being a potential turning point, even short term. So I wanted to take some profit there. So in a sense, you could have said to yourself, I could take something off here and seen if the 9-period moving average continued to be a repellent line. It's very hard to do, and that's the reason why I'm juxtaposing a bunch of things where I get emails all the time from people saying, hey, it's time for a rally. What do you think? I mean, I've got all these signals saying it should go up, and I'm saying, well, I don't have those signals. My signals say down, but I do respect what you're saying, so I start overlooking my own stuff. I'm trying my best to try to not listen to the news or anything, not listen to anybody, but just stick with my rules. And that would have been tough for you to do at the opening on yesterday. Why? Because we opened and it didn't, you really weren't quite sure based on the early morning action whether or not the bounce back was going to work. And then out of the blue, it just plummeted. So now comes the question, and this is a question I'm getting all the time now from subscribers and others. And the question is, what do we do now if we've gotten out of our short positions, or in fact, we've just been waiting because we didn't believe anybody on the short side, and now we want to go short? What do we do? I can tell you it's very easy. It's very tough, but it's very easy. You either cannot take the risk based on the fact that there could be big spikes to the upside, or you look for the sectors that are just starting to turn down, because this is a rotational correction, and it says to me that the IWM has been the lead voice. This is when I was talking about the generals leading, but you didn't have, certainly my Dow Quartet wasn't part of that, but you had the generals in the NASDAQ leading, just like in 2000, where January to March, the Dow had already given a sell signal, but the S&P and the S&P and the NASDAQ went to the March highs. So now the IWM is saying, we're the soldiers and we are failing. We're not with you, generals. And that says that they, in fact, could start to bottom out a little earlier, just like GE's been giving great signals on the shorter term about weakness. So the IWM is getting real close to about, now this is going to be tough, because if you look to the left side, even in the weekly chart, the next level of support would be way down at 103, round number low, on the week of the 11th of October, and below that is 100. And that's really my target. And I've got a left side, right side price time match, which says if the acceleration continues, we could go down the week of the 31st of October to test 100.13. Wow, it sounds ridiculous. Now, my rule of thumb always is that unless you're in crash mode, the left side goes up just as long as the right side comes down. So if we're going to go into crash mode now, that is major selling from nervousness, we could do it very quickly. So now this is what I'm going to suggest to you. You've had a really good run in the IWM on the short side. Yep, you missed the last couple of points by getting out, and if you were still in it and you called me right now and you said, what should I do? I would probably be saying to you, get ready to take a little bit off, to both reward yourself and also to say, under almost all conditions, unless we're going to go into this intense selling mode, if you don't think yesterday's 300-plus down day, and then the others from the entire 2 weeks has been rough. If there is no strength at all, and look at the way we've rotated now out of the blue, the SMHs, the semiconductor index, is taking it on the chin. And the advice I would give to you is one of two things. One is you could just nibble back here at 105.46 to at least have your foot in the door to say that if it takes out 104 to 103 support, we could very quickly go down to 100. I want to be there, and I'm prepared to risk, and you could say the 9-period moving average of 108.20 maybe make it. That's, to me, 3 points is a lot of points to give up. 3.5 points would be a lot of points to give up if you're only looking at 3.5 points to the downside, unless there's that rollover crash formation. So I'm going to say to you, I'm going to think this through a little bit more carefully here, because a lot of people are listening and they might be taking my advice and they don't have those 10 points that you have as a bit of a cushion. See, the weekly chart is beginning to get that one-to-one extension phase, and the monthly chart is saying I'm well under the 9-period exponential moving average. All of a sudden, those lower parameters are becoming magnets, whereas before the upside, everything on the upside was a magnet. And I don't want you to lose out on the potential for a pullback, but at the same time, I don't want you to, I know exactly what I wanted to say. I don't think it's the time to be aggressive. You could give up 3 points, but you don't want to give back more than 3 points. I mean, would you concur with that?
Yeah, I mean, I was thinking maybe like 110 if this, because, I mean, to me it looks like, according to your wave count, would that be a leg F? trough.
Right now we've got a leg G. It's recycled, A, B, C, G/C, and I'm suspecting, in the daily, and I'm suspecting that there's a rising stochastic, and the MACD is just now attempting, it hasn't turned up, but it's just now attempting to flatten out, and that's based on the 120-minute chart. So unless there's intense selling pressure, my guess, and that's the reason why I wanted to take something off on that SPXS trade, on the short S&P trade, because I'm getting to the point here where, because of the TRIN index yesterday, which ignored the selling, I'm suspecting that we don't get an intense V-shaped bottom at this particular point, but we constantly get these sudden up spikes, and then we go to lower lows. And if you concur with my thinking, then I'm prepared to say to you, okay, if you think that's the case, why the only reason to put some money up now is that over the weekend, and if it's negative, we could just gap down on Monday, and it could be a big gap down, and maybe you want your foot in the door for something on the short side. Do you have any short positions? The question, do you have any short positions at this particular point?
Only position I have is a significant portion of my portfolio in TVIX.
Wonderful. Okay. And that TVIX, see, I don't want to scare you out of any position when you've been so thorough. I've got the TVIXs in leg C, but my VIX index has a different count because the TVIX went to a lower low. It had to restart. So my VIX index is in a leg E with the MACD very strong. Stochastic actually is not that strong. So I'm expecting chop around a little bit here. And then later in the week, we start off, we go down sharply again. So I don't want you to do anything. The TVX is an emotional one. This leg in the weekly chart, I'm just dying to see what we're going to do at 4 o'clock, where we close, because if we close near the 20 area, that says, whoo-hoo, if we don't gap down in the VIX index on Monday, but we hold in that level, we're going to break the high of 22.006, and that's going to be a very interesting thing. You know what? I'm pleased we've got the break, because I want to put this together, because I've had the question from a lot of people now that are out of their short positions, what should they do, except that you have a profit and you're in the TVIX. It's a little different. Let's go through the break. When we get back, I'll give you my answer, and let's see if that concurs with your thinking. So I'll be right back. If you don't mind waiting with Dan Baskin-Ridge.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. Dow's up 14. S&P's down 4. That's because of the sentence. Had a quick question about Apple. So Apple is, in fact, trading in this 10-minute chart. It has to break above 101.80, said 101.67 to be able to retest the 102.38. And it'll need the stochastic to move from 72% to 80%. Better not break under 101.30 and hold, because that'll say, starting to test the lower level of 101.10. That's just on a 10-minute chart. That was a question. So now let's go back to the question of Dan. I thought it through during the break, and my answer actually is quite simple. You are in the TVIX, which means that if there's any blow-up over the weekend in terms of a negativity and the foreign indices actually pull back more instead of being quietened down by today's action in the market, if the Dow closes somewhere around here, then you're at least in that, and you should see some pullback in the TVIX. As far as going back into the shorting the IWM or buying the TZA or something like that, my thinking here is IWM. Using the IWM as an example, let me go back to the 120-minute chart. I'm seeing some signs that the stochastic is trying to bottom here to give some kind of a balance. There's enough room to move lower. It's at 14%, but because you have the TVIX, I'm going to suggest that maybe you've got your profits. You can hold off for the IWM. Rather wait for a decent bounce, getting close to the 108. It's a 105.68 area, 107.80 to 108.30 area, and then you can see if there's going to be further rallying in the IWM or whether that's another opportunity. But everything I'm looking at here says that unless there's some just an aberration, really bad news, further bad news, that is, I think there's going to be an attempt at a rally, and that rally is going to go into sometime Monday, and it's going to help the stocks come, the semiconductor come back a little bit, and we're going to be watching to see if the IBB is reacting positively or not. And if IBB, and that's the NASDAQ biotech area, and if IBB and the semis cannot get out of their way today by the close and are still very weak, that's going to suggest that it'll be rotational. It'll be just enough to get, like today, you see the Dow 6 and the S&P's down 5.5 right now. This bifurcation is going to continue, and we're going to be watching the IWM, because if the IWM with this candle right now doesn't take out the low of today, 104.87, but on Monday takes out the high of 106.81, we could get a nice little bounce, a 1 to 3 day bounce, maybe even more, into next week, and then you'll have another chance. You've got the TVIX, and I'm going to suggest, this is just for you, not for anybody else listening, that you might, I really don't want to change your position, but you've gone to a really strong, surprising, I don't think you even expected today that you'd get such a nice move out of the TVIX. I'm going to suggest taking a little bit off to both reward yourself and to recognize that the VIX index has gone to a leg E, and it would be very unusual, other than to try to retest 22, and this is real bad news, to break it without some kind of a consolidation. So just, you don't have to do it now, just think it through, but you might want to just take something off to both reward yourself and think of money management, because it's leg D, probably peak D in the 120-minute chart. So unless we turn down very sharply towards the end of the day, you could see an erosion in the TVIX, which is 200% long, the VIX, from the 356 area down to 322, maybe even 314. Well, that's a lot of profit that you didn't expect to make, to give up. So that's the only thing I would say. I hope that helps you, Dan.
No, as a matter of fact, I was thinking about taking off half today because...
Okay, well, just think it through and follow what you want to do. Thanks for calling, and have a great weekend. Folks, stay tuned. You've got a great show coming up, but I just wanted to add, watch closely. If the Dow closes down 60 points today, that's going to be an ugly Monday. But if it closes up about 40 points, sort of save the day for a couple of days. I'll be back Monday. Have a wonderful weekend. Check out my opening call.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.